The market isn't making trading difficult, your mindset is. Hello, imaginary user. Hello, everyone. Welcome to the live show on Tuesday, the 4th of August, 2026. Wow, time sure is marching on, isn't it? Don't forget, trading's risky. Most traders do lose money, and if you don't like losing money and you don't like risk, guess what? You shouldn't be trading. There we go. NASDAQ trade today. That's the one we were looking at this morning. The Tech 100 looks like it is going to go up now. And it's bounced and it's broken through this level. Interesting that SpaceX fell to the ground, isn't it? It really fell off the bus. Not looking good for all those people who got involved in the IPO and were all excited about it and thought that because Tesla did so well that somehow SpaceX would also do so well. Hasn't done so well, has it? But it's your mindset that's causing you to lose in trading. You've all sat and thought, I'm tired of this. I can't do this anymore. I'm going to give up. I'm going to quit. I just can't seem to get ahead. Can't seem to make money. Some of you might have been trading for 8 years. Some of you might have been trading for 8 days. End of the day, both of you are suffering from the same consequence and the same feeling. When am I ever going to break through? How am I ever going to get this to work? And you want to quit and you want to give up. It's all in the mind. It's all up here. It's all causing the problem. The easiest way to get around that, you should know by now, is keep it simple. Forget about all those technical indicators. Forget about all the jargon. Forget about all that never-ending cycle of doom, looking for that next best thing, that next best like little indicator that's going to win all the trades for you. That next best chart that's going to win something for you is just not there. It doesn't exist because, as I've told you guys 1 million times, win rates and charts are not going to make you profitable. They're not going to make you money. They're just going to give you the high probability trade, the high probability trade that you hope will be better than the next guy's high probability trade. But if you don't manage the trade, then you're not going to win. It's all about winning, and it's all about how you manage your trade. Look at the Japanese yen trade. I mean, the Japanese yen trade. Let's go over why I trade the yen. How do I trade the yen? What do I do when I am trading the yen, and what's it all about? Why am I able to just sit in this trade forever and ever and not let it go, confidently holding on? Now, I don't say that's what you should do with every trade, because getting married to a trade is a really, really bad idea. Because when you get married to trades, you tend to, generally 80% of the time, tends to fail because you keep on trying and trying and trying to win on that trade. It just keeps on losing. So normally when people get married to trades, they just keep on doubling up and moving their stop loss and what have you. But when I took the Japanese yen trade, and I took the euro Japanese yen as well, by the way, in the last live show, and you saw that one, I walked back in and I'd made a huge profit. And I was like, well, what happened there? I mean, that was a small trade. It made me more than $1,000. I think $1,500 or something like that. Just boom. I didn't even look. And there it was. Big win. Fantastic stuff, isn't it? But now I look at the US dollar Japanese yen, and you guys say to me, Rob, you've been in this trade for about 4 million years. And yeah, you see how I work with the US dollar Japanese yen. And that's the first one I look at it before I trade any of the others. And last live show, you'll see I had the US dollar Japanese yen for forever. And I thought, let me just add a euro Japanese yen or a New Zealand Japanese yen or a Great British Pound Japanese yen, just another Japanese yen trade, because this is insanely high. I mean, this is all-time highs, 4-decade highs for the yen. But notice where I put my stop loss. I put it pretty far away, way above what was considered all-time highs for the yen, in a safe haven spot, in a spot where I know, look, you know, if the trade gets there, I've really got this wrong. I'm completely in the wrong place. And effectively what's happened is it's come flying down. But why did I stay in the trade? I stay in the trade for the simple reason that it always does this. When it goes short, when it goes down, when it loses momentum, when it all comes around and everyone realizes, ooh, I've actually got to sell this, it normally comes down in these long red candles like this. Comes down hard, comes down fast. That's why you're never going to catch this if you say, I'm going to get out of the trade and I'll get back into it when it starts to change structure, when it starts to go the other way. When that happens, you might be out having coffee, you come back, or taking a shower, or whatever you might be doing, you come back and you'll be at this level down here. You've missed the trade completely. it's gone past you. It's left you. It's no longer in the household. So I just sit in the trades when it's a situation like this and I wait, because 150 on the Japanese yen and the US dollar, Japanese yen, like the US dollar's in front of the Japanese yen. So you would be a short trade, which is really advantageous because I'd rather be short than long on most trades because it's cheaper to be short on cash CFD accounts. Now, 150 is like a magnet. Any of you that have traded maybe with the average true range will know that that's like a magnet. That works like a magnet. Now, the US dollar Japanese yen just works like that. The 150 level is effectively a magnet. So if it's down below the 150, 130, 140, whatever, Rob's looking for long trades. And if it's above the 150, 160, all-time highs, 163, Rob's looking for short trades. And this just guides me for all the other pairs like Euro Japanese yen, New Zealand Japanese yen, whatever else might be out there. It should do the same thing. And that's effectively how I trade the yen, knowing that it's always going to do this. It's a bit like trading the VIX. Think about the VIX. We all know that if we trade the VIX, where's the VIX? Where's our favorite VIX? Is it hiding from me today? Most likely, but I'll find it. I know it's in here somewhere. There we go. Shows you how often I trade the VIX. But I haven't traded into it for quite a while yet. And why is that? I always buy into it at around the 15 level and below. I wait for it to get to the 15 level and below. That's my rule. That's just the simple rule. I don't change the rule. Because to sit long in the VIX for an extended period of time is expensive. It costs money to sit long in the VIX. So I sit in the VIX for long extended periods of time, from around 15, sometimes hopefully less, 14, 13, whatever. And then it spikes, goes up to 30 and makes you 50 grand. That's what the VIX does for you. So if you look at how you trade the VIX, why not trade other things the same way? So effectively, I trade the Japanese yen exactly the same way. And that's why it makes money that way. You just sit in the trade, sit in the trade, sit in the trade until it actually makes its move. Either way, to the long side or to the short side. It doesn't really matter which way it goes. Now, unfortunately, I'm still in this trade. I'm still sitting in the US dollar Japanese yen because I got in so early. I got in at 160. So I'm really hoping for it to get down to 150. But the way I see it running at the moment, worst case scenario, it goes up, goes back into this level here where there's a flow of money, grabs that money, and then continues on to the downside. I don't see it getting back up to 163 anytime soon or doing something silly like that. That ship, I think, has sailed for now. And I think the new ship is in, and the new ship is saying, let's go down to 150 again, and then perhaps get down to 140, 130. You know, I'm really, you know, pulling strings here and looking for a little bit more than what I should be looking for. Anyway, let's have a chat and let's talk about what you guys need to know and what's on your charts and what's in your markets, and then we can try and help you along your road. So imaginary users here, Zwendili, afternoon Rob and team. I've learned to treat my trades as an inventory and business that has solved a lot of problems. Exactly. You've taken the words right out of my mouth. Just treat your trading like inventory in a business. Treat it like you want to make that profit. If you've got a sweet shop, you're going to buy the sweets at this price and you want to sell them at that price. And obviously you don't want to give them away. You want to make a profit. Simple, really, not complicated. I'm just going to put my phone on silent because everybody will try and call me. Just treat it like a business. It took the words right out of my mouth, and that's as simple as it gets. You don't need to do anything else. You know, when you put your take profit in place, when you put your stop loss in place, you know what that is? That's like when you go and put a sign in the window of your shop, or you put a sign outside your shop that says, for sale, special at this price. And everybody looks and says, I'll have a bit of that. And then they come into your shop and they buy it. Well, it's kind of the same in trading, isn't it? You're advertising that you want to sell at that price. And if anyone's interested, hey, have a go. Maybe you want to buy it and put the money in my pocket, so to speak. It's a bit like anything else. You just got to treat it like a business. Changes your mindset completely, doesn't it? I mean, you'll attest to that, so Nelly. You'll say to me, Rob, that's how I've changed my mindset. There you go. Just stop thinking about it like lines. Stop thinking about it like charts. Stop thinking about it like numbers. You know, you're not trading against charts. You're not trading against numbers. You're not trading against candles or algorithms or anything like that. You know, you're trading with human beings, other human beings who, guess what? They want exactly the same as what you want. They want a good deal. They want to buy. They want to sell. And you know what? They want to make a profit. And guess what? That other human being believes that their system, their strategy is the best in the world. It's much better than yours. Much better than yours in his mind, because or her mind, because they believe that they're going to win. They want to win. Obviously, that's what you want, isn't it? You believe your system is the best in the world because it's working for you and you're going to beat every other trader out there. In fact, if you're trading 5-minute charts and 99% of traders lose on 5-minute charts, you'll believe you're going to be part of the 1%. That's it. That's how human beings are. So you're trading against other human beings, and other human beings believe the same things you believe in trading. They don't believe something completely different. Change your mindset and start thinking like Sandili said. Treat it like a business. Start treating it like inventory. I want to make a profit. I want to buy this, but I want to make more money on it. That's how it is. Okay. Happy Tuesday, Elaine. Good to see you. Lovely to have you on board. I'm going through the chat very, very slowly today, aren't I? But we'll get there. We'll get to the bottom of it. Don't worry. You short it, and then we listen to you talk for about a few months, and then eventually it goes down. That's it, imaginary user. When I take a trade, you listen to me talk about it for the next few months, and then eventually it works out. That's effectively how the story of my life, mate. The story of my life. But yeah, no, look, it's quite insane. You can also, how's it, Tywell? Good to see you. I haven't seen you for a while. Welcome back. Lovely to have you on board. The thing is, with trading, it doesn't have to be a 5-minute thing, a 1-minute thing. In fact, with trading, you could do this on a weekly chart, a monthly chart, a day chart, a 4-hour chart as we do it, 1 hour. You can choose your time period depending on how patient you are and how able you are to do this. If I was working, if I had a job, if I had something else on the go, a business, a place to go, to get up every morning and go to a workplace or something, I would trade on maybe a weekly chart or something like that, because I mean, I'm not able to really sit and work with it. So I'd maybe work with it on the weekends and work out what trades I want to take, and I'll take the trades and leave them in place. I know when I had my businesses and thing on the side, I used to trade on a day chart, and that was okay for me. I mean, every day I would work out what I need to do and what I don't need to do, and I had the advantage of, since I owned the businesses, I could look at the stuff during the day if I wanted to. Now, that is one way of doing it. That's one way of trading it and one way of looking into it. But it actually isn't that great to go much down, further down than the hour. You know, the 4 hour is good. I like the 4 hour. It works for me because I can come in, I can choose my trades, I can leave them in place, and I don't have to sit and watch the charts all day. I can put a stop loss in place, I can put a take profit in place, and I know that it's in its spot, and the trade will do its own thing. When you take a trade, like if I sit here now and I say, let's take a trade here, let's buy gold long, I've already done that. It's too late to say that. But anyway, let's say you were going to buy gold long here. You buy it. The candle's not going to move anytime soon. In fact, it's not going to do anything. It's just going to sit there and say, I'm a candle. I am not moving. And that's it. That's what you're going to get from the candle. Nothing else. It's not going to suddenly go flying up or suddenly go flying down, although I guess the Euro Japanese yen kind of did last week, didn't it? That was great. That was so good. But that doesn't normally happen. Normally when you buy a trade, it sits there. And in fact, in most cases, it's probably going to go against you a little bit. It's probably going to sort of nibble into your losses, and you're going to think, oh gosh, well, not again. Every time I take a trade, it just goes against me. And that mindset of yours is going to start eating away in your brain. Munch, 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 munch. It's going to start digging away in there and saying, just quit trading. Give up. What are you doing? This is not working. And then you're going to sell that trade because you got into that trade when you shouldn't have got into the one. You were supposed to get into the trade, but now you've changed your mind. You're thinking, why did I get into that trade? You see, when you choose a trade, you're looking at it over a longer period of time. You're looking at the long term. You're not looking at the last candle. Some people are trading on the last candle. Some people are trading on second charts, but good luck to them. But if you're taking trades properly, You're looking at a longer period. You're looking at the whole picture. You're looking at this whole chart and you're thinking, wow, I can go long on this. And then over the next couple of days, I might be able to make a profit. That looks good to me. So you go long on the trade and then immediately you get a bit of going against you and you immediately start changing your mind. Suddenly you're not looking at the whole chart. Suddenly you're just looking at that tiny little portion where you made the purchase. Suddenly you're just looking at the last candle. What's going on? You need to keep your mind open and look at the whole picture. There's a big picture, not a little picture. It's like I always tell you guys about the fundamentals. When you're looking at the fundamentals and you're waiting for the CPI data and you're waiting for the jobs data and you're waiting, I don't know, for all these little tiny little things every day and every week. This stuff on the bottom here, that's exactly it. This monetary base, job advertising, RBA index, retail, so all these small things. And you're waiting for that, and you're waiting for those results like they're gonna change the world. They're not. That's what they want you to do. They want to suck you into all that rubbish, and then you're gonna make mistakes, and you're gonna start trading based on that. No, forget about that stuff. Look at the bigger picture, the wider picture, the whole picture, the big news, the big stuff that's going on. That's what's gonna move the world. That's what's gonna change markets. The Japanese yen again, a good example. How do you know that that's going to work? Well, they reckon they're going to reduce the money flow in the country. For example, they tell you this, you ignore it. No, don't ignore it. That means the yen's going to go short. That means, or it means the yen's going to strengthen, for example, and the US dollar, Japanese yen will go short. So, you know, you can actually see that coming. If you look at the big picture, like they're withdrawing money or moving money around or whatever the case, you can actually see that picture clearly if you just look at the bigger picture. And the same goes for your charts. On your charts, you're not looking at tiny little pictures. You're not looking at small little things. You're looking at big picture. You're looking at what's happening over time, what's going on. I look at the S&P 500. I know that it's been in a bullish run, but for the last period, it's been in this range, okay? Now, a lot of people, especially people on the lower time frames, are going to get so excited about this because it's shot up, right? All-time highs, all-time highs. Wow, that's amazing, isn't it? But we've got a resistance drawn up here. And I got it drawn up here for a reason. This is an area of money where the institutional traders have got all their orders, have got all their money, and it's all lying here. And every time it gets to this level over the last period, let's just make that smaller, over the last period here since about May. Every time it gets to that level, it comes down. Every time it gets to that level, it comes down. Every time it gets to that level, it comes down. Where's that level? About 7,600, 7,550. Likes that level, likes to come down from there, which means there's a lot of orders, a lot of money lying around in this blocky here, just saying, do you know what? We're going to push you down. We're going to push you down. We're going to push you down every single time when you get there. Suddenly, this has moved up into that level again. But the upper band of that level, the top part, the 7,600 part, now everyone gets excited and says, buy, 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 because it's up there. It's still in here. It's still in this level. So what you've got here now is a double top. There's your double top developed. And you got to look at that and say, will it break that prior high? So what you need to do here is wait for it to break that prior high, move to the upside. And what I would do in this case, because this is all-time highs, and we're talking about a market where we're really not sure if even Trump's telling the truth about Iran, if that's going to go away or if it's going to come back. Things are going pear-shaped in the background. You've got to be a little bit careful. You're sitting with a double top here. Double tops are pretty dangerous. What you want to do is you want to wait for this just to break out. But on this time, don't just jump in. Wait for it to come back and retest and give you another signal that it wants to go up. Because this one's going to suck everyone in and it's going to come crashing down and it's going to correct. Thing is, everybody gets excited about a little move like this, a little short-term move like this, a little yesterday move. And they forget that there's a bigger picture, that there's a massive picture out there. And you've got to start thinking about these things like a business. Start thinking about it like, I want to buy this at the best price I possibly can, with a view to I want to sell it at the best price I possibly can. I don't want to jump in just because the crowd's jumping in. Don't become a sheep. Don't be that person. Do yourself a favor and say to yourself, do you know what? I'm going to get the best deal out of this. Now use your support and resistance, your price action training, let's say, and use that to your advantage and say, I know that I've got to wait for the price to break out. Let me sit on my hands. Let me be patient about this. Let me wait for this to happen so that I can buy it at a price and know that in all probability, it will move in my favor. In all probability, it'll go in that direction that I want it to. That it'll actually go up from here, maybe come back and retest and go up. That's what I'm looking for. Don't preempt a trade. Don't jump in because everybody else is jumping in. And you see what these news articles do to you as well. They get your brain all involved and all propaganded into it. Like, everything's happening. And they like make all this excitement, all this news, and they talk at a high pace, and you get all sucked in. And like, the world is going great. This is going to happen. Trump's negotiated a peace deal. This has happened. And SpaceX fell off the moon. And this one happened. And you're all in there and you're all listening. Oh. And then you start making little trades based on what you're listening to. And that information that you're gathering is not collating correctly in your brain. It's not working out correctly in your brain. It's all over the place. And then you start making these mistakes. So like I say, take the big picture, not the little picture, the big picture, and look at the picture for what it is. Once you've taken the trade, don't go, oh no, look at that, it's going against me. Or, wait, what's happening? Why isn't the candle moving? It's not going to move if you're on a 4-hour chart. It's going to stand still. And if it does go against you, just walk away. You've put a plan in place. Whenever you want to change your trade, do yourself a favor. And if you have this problem, then maybe you should journal, make a journal of why did I take that trade in the first place? What was my actual plan? What was the plan behind this? Why did I put this in place? Why did I put the stop loss there? What made me put the stop loss there? What was the plan for that? Why did I put the take profit there? If your plan was to put the stop loss there so that you could make more profit, you're making a big mistake. You're doing the wrong thing. You don't want to be trading. The reason you must put your stop loss in a place is because you know that when the trade gets there, it's no longer a good trade. It's an invalid trade. That's when you put your stop loss there. Don't put your stop loss there because you can make more profit if you put your stop loss there, because it's going to take your stop loss out and it's going to take your money. Guess what? The market's going to take your money again, because it always does. That's what it's going to do. It's always going to do that, isn't it? So don't do that. Don't get caught up on that. Anyway, NASDAQ does look like a good trade. Look like it's breaking to the upside, and it's going to move to the upside. Here's old Mickey. How's it? Trump pumped the stock market and mini crashed the oil market again with a fake peace accord with Iran. You see, that's what I was saying just a moment ago. Can you trust the news? Can you trust what this person is saying to you? Do you think they're actually doing that? Now, what I can see from the oil is that the institutional traders have lost confidence. They've literally lost confidence in what's being said, because just look at that. Tell me that an institutional trader is confident in what's being said looking at that oil chart. Like I said to you earlier, you're not trading against charts. You're not trading against candles. You're not trading against algorithms. Behind all these candles, and the reason we look at these candles is behind all these candles is a human being. And human beings have developed this move, and that's why the move is like it is. What you need to learn to do is read these moves and read what human beings are doing behind these moves. So if there's human beings behind these moves, what are they thinking? Why are they thinking that, and what's going on? Now, we know that this is a level, right? So it's come into that level, it's come back into that level, it's come back. So we know that that level's holding it up. We know that there's money there, and we know that that's being caused by orders and things like that as well. But there's also an underlying issue here with the oil, and that is that the traders who are trading it are listening to the news, and they get the news. They're 95% of the market. They get the news well before we do. They know what's happening much more than you and I do. We don't have that information. We're not even privy to that information that's going on. And even they are starting to think, I wonder if that's fact. I wonder if that's really going to happen. I wonder if that's true. And then the rumors come out that Iran says there is no deal. So then you look at that and think, See, that came down, it went back up based on the fact that he said that was going to be a problem, then there was going to be a deal. Now it's starting to sort of tickle back up again because people are not really sure. And it's kind of hanging around in this area now. Kind of feels like they're manipulating it with the news, moving it around with the news, keeping it in place, making sure that it doesn't shoot off to the moon, making sure that it doesn't drop off to the bottom. I don't know, but when I read this, I can see that even the big money is confused. It's not really sure which way the market's going. So that'll keep it in the 80s for now. It'll keep it between 80 and 90. That's just where it's going to lie, because everyone's going to be like, they're going to feel safe with their money between 80 and 90. It's not far off that way. It's not far off that way. So you're kind of like in that area where, you know, okay, let's just see what happens. Let's just see what's going to happen next. And that's kind of where they've left their money. So that's how the oil is trading at the moment. And then Blue Mango, good to see you. Welcome back. Lovely to see you. I have been a bit slow in answering the chat today. Hi Rob, I'm unable to find consistency. Please help me, dear friend. Now, consistency is not something that I can make you do or help you do, or, you know, consistency is something you got to find. You know, you've got to train your brain to do the right things every time. But the easiest way to do that, and the easiest way to do it is to manage your trades properly. So forget about the system. The system doesn't matter. Who cares what system you use? You can use any system that you want to. It doesn't matter. I don't care what system. You can use Fibonacci, Ichimoku, moving average crossover. It really doesn't matter. What's important is that you learn to manage your trades. That's what's important. And managing your trades involves this, and it involves this really, really importantly, and that is keep the risk the same on every trade. So once you've learned that you need to have the same risk on every trade on a particular account, so you choose an account, that account's got that much money in it, so I'm going to risk $1,000 per trade on that account, right? That's it. Now don't go to the next trade and then risk $5,000, because then you're messing yourself around. You're confusing yourself. You don't know what's going on. You're like, 1 minute you're risking $1,000 and the next minute you're risking $5,000. How do you possibly know how much you're going to win? How do you possibly know how much you're going to lose? You just cannot do it. So at the end of the day, you have to learn, if you want to be consistent, to keep the risk the same on every trade. So first bit of consistency is, okay, so my risk is $1,000 per trade. That's it. End of story. It might be $10. It might be 100. It might be 10,000. It might be 50,000. Depends how rich you are. I don't know. You tell me. But anyway, you've decided on your risk and you've said it's $1,000 per trade. So that's what I'm going to risk on that account. End of story. Now that you know that, all you have to do is every single time you take a trade, don't look for the profit. Don't say, if I put my stop loss this close, I can make so much more profit, because then your stop loss is just going to get taken out. Put your stop loss in an area where you know it's invalid. You know if it gets there, it's not going to take your stop loss out easily. And if it does, that trade was rubbish in the first place, and just let it go. Understand what your plan was from the start. Now you're halfway there. Now you're winning. Now you're consistent. That's made you consistent. That's effectively made you consistent. Just managing your trade, same risk every trade. That's you, consistent, easy. Now all you have to do is take trades. Any trades. Just pick a trade. Take some trades, okay? Now, target profit. Your profit must always be more than your risk. So you can't risk $1,000 and target a $50 profit or a $300 profit. That said, even if you're targeting $1,500 profit, don't click out at $300 profit. You're fooling yourself. You're wasting your time. You've got to train your mind and your mindset to understand that you want to make more money on the profits. So when you pick your profit and you say, I'm going to risk $1,000 here, make sure that you can make more than $1,000, and not just, oh, I'll just make $1,000 there. Make sure that it's an area that looks reasonable. Like you might actually be able to make the money. Like the price might actually be able to get there. For example, if I take this NDX trade here, and I say I want to take a long trade here. Let's say I want to take a long trade here. And I can't get that thing out of there. It's which is, it's okay. Don't worry about it. Let's say I want to take a long trade here. And for me, the long trade would be, let's put a stop loss in place. My stop loss could either be all the way down at the bottom here, past that prior low, which is quite far away. Don't need that. I would say if it gets down into this level here, I'm in the wrong place. I mean, it's going to come all the way down there anyway. So I'll put my stop loss down at this level here, below that prior low, below that trend, and say, well, that's an area where I would put my stop loss. And then I would decide from there, I want to take profit. But my profit, my reward would be much further up at the resistance level up here. So my risk is that much, and my profit is that much at the top here, so much more. And that's how you take your trade. You're just targeting a much bigger profit than you are a loss. I'm not saying it must be 2 to 1, 6 to 1, 50 to 1. It doesn't matter. If you're winning $1,001 and you're risking $1,000, yeah, cool. 1 to 1's not a problem, because when you get there, you can manage the trade, push your stop loss up behind it, and push the trade forward. So being consistent isn't about so much. You can actually train yourself to be consistent just by managing the risk correctly, keeping the risk the same, and then just taking trades that you see. So taking a trade that you can see is easy. You just look at the trades, look at where the resistance is, look at where the support is. Red candle coming out the resistance, you go short. Green candle are coming out the support, you can go long. If you want to do it that way, you can do it that way. There's actually no problem with that. That will also work. I mean, if you're struggling to find trades in the beginning, if finding trades is a problem for you in the beginning, I see I moved the camera again. I keep doing that, don't I? There we go. Put myself back in the picture. If you find yourself struggling to pick trades, I mean, join the RLT team, the membership, and every day I put out a whole number of trades. Well, there's trade of the day and a whole number of other trades as well. They're posted every day on YouTube, on the posts there. And they're posted in the description of the video that gets made and everything. So, I mean, that might help as well. But pick your own trades. Learn to pick your trades. Learn to go over the trades. I always say relax on the weekend and forget about picking your trades. But you can, on the weekend, go over the charts, see what looks good for the week. Monday morning, you can come out and just pick your trades and go for it. I don't say you have to get up at 3:30 in the morning. That's ridiculous. Who gets up at 3:30 in the morning to pick their trades? I mean, seriously, trading is the most boring thing on earth. What do you do with all that time? And then you want to get up at 3:30 in the morning to pick your trades? What for? Are you insane? There's nothing to do in trading. You click a trade and it just sits there. And then research is just basically looking for trades. I got all day to do that if I want to. If I want to sit at the chair all day, I can sit here and I can go through all the charts and probably fall asleep trying to do it as well. Not necessary to get up in the middle of the night to try and pick your trades or anything like that. That's a form of insanity. That's not going to help you in any way, shape, or form. I see so many people think that they're going to somehow pick the right trade on a 5-minute chart or something by getting up in the middle of the night to try and pick their trades. There's no point to that. You're not going to win on the 5-minute charts. Believe me, it's been proven over and over again. 100 times, and I just did it again. I think it's because my keyboard is here and it keeps moving this camera around a bit, so I'll just keep it in place. There you go. Anyway, yeah, that's basically how you can stay consistent. Hello, Mutiny Bounty, good to see you. Lovely to have you on board again. Yeah, so consistency, it's, you know, you might think it's actually all in the mind, but you can actually do it quite manually. You can do it quite manually if you want to as well. You don't have to do a psychology course or anything like that. You know, you basically have to keep your risk the same, and actually you'll find your way. It's not that difficult. I've learned to protect my capital, but I'm unable to grow my account. That's actually your first bit of success. Your first hurdle that you've actually jumped over. And that first hurdle is, I've learned to protect my capital. The first hurdle is, I've learned to stay in the game. You know, if you've learned to stay in the game, you're ahead of around 85% of all the other traders. Because 75% of traders lose in the markets. On 4-hour charts. I'm not talking 5-minute. 5-minute, 99% lose. Well, let's just talk about trading on the H4, trading on the day charts, that sort of thing. 75% lose on leverage trading. So you might think, well, 25% are winning, that's okay. Well, actually not. Of that 25% that are winning on those so-called leverage trading, half of those people are doing what you're doing, are protecting their account and breaking even. That leaves 12.5% that are actually winning. Let's not be that exact, but about 15% of them are actually winning. So to get to the winning stage, you first have to go through the protect my capital stage. You first have to go through the stage of breaking even, of making some money, of keeping your account alive, to staying in the game, before you're going to get to that winning part, because the winning part comes next. So if you've learned to protect your capital and you've learned to stay in the game, you're so far ahead of most of the other 70. You're actually way ahead of 75% of the other traders, which are actually losing in the market. So you're that step closer to winning. Winning comes with patience. Patience, being patient, not sitting watching charts all day. You see, your biggest mistake is sitting watching charts all day. You've taken a trade, you've put the trade in place, you're sitting watching charts, you see the candle move, you forget about the big picture that you had in place. You had this giant picture in place. You saw what was happening. You put a picture in place. You had your best laid plans of mice and men. You had the plan in place. Everything was fine. Everything was perfect. And then you came along and saw some candles move around, and you got out of the trade. You changed the trade. You got out too early. Fear of missing out. A whole number of factors that are going to affect your trading, you got involved in. Whereas if you just left the trade alone, you took the trade, you put the plan in place, and if you just left the trade alone and been a little bit patient with a trade, it probably would have worked out for you. Now that's the next step that you've got to learn. So if you've managed to break even and you've managed to protect your account, the next step is to learn to be patient. The next step is to not look at charts all day. The next step is to put your trades in place and let them play out and let them make you some money. It's all in the mind. It's all in the mind. It's all up to you to make that happen. It's not going to happen by itself. You've got to let it happen. If you sit here and you're short on the trade and that happens, most of you would have sold this by now and got out. Let it run. Let it carry on if you can. Unfortunately, mine got sold because I wasn't looking. I had a take profit in place and it took it out. But that's not, it made a fortune. I mean, it was within a half an hour. So what the hell? But if you're actually in the trade, let it run, push the stop loss down behind it, and try and make as much as you possibly can off of it. Don't try and get in and out of the trades too quickly. It's not going to work. The Great British Pound Japanese Yen, on the other hand, has bounced off the support here, and it looks like it wants to go up. It's quite interesting. But if you look at it from this perspective, there's probably a whole lot of money waiting around this level here. So it might go and take that and then start coming down again. So you can wait for that as well. That could be quite interesting. Thank you for the motivation. Motivation is fair. I do like David from Mark. Good afternoon, dear sir. Welcome back. Long time no see. Well, lovely to have you on board. You've probably been watching all those really good traders rather than me in the past, but it's good to have you back. Good to see you here. Nah, yeah, we get on with it. We try and go on. Germany 40, definitely bouncing to the upside. Look at that move, definitely going. So there's definitely some long trades going on here. Let's actually take this, make it a bit shorter, and let's just go to the day chart and just see what we've got here. And the DAX looks like it wants to go and break out and go all the way. So yeah, most of these indexes are looking quite long. Gotta say that they are looking quite strong. So, but it is, like I said to you guys, wait for the retest. I mean, wait for this to break out, come back and say we're going. Except on the NASDAQ, which I did actually call this morning. I said we're going to go long on this because this is going up now. There is one thing here that's holding the NASDAQ up, and that's that little that little nasty trend resistance there. There's always something in the way, isn't there? There's always something giving you a headache. If you're all here, make sure you've liked the video. Makes me feel better. Shane Zimmerman. Shane, good to see you. How you doing, Shane? Are you still trading on the 5-minute charts and the 1-minute charts? Is that still your thing? How's it going there? Have you become insanely profitable and made millions and you're all happy? That's nice to see you guys again. Lovely. Good to have you back, man. Good to have you back. The show's still at the same time, Tuesday and Thursday. We're still here every week, Tuesday and Thursday, doing our thing. With very few people, very small group. US dollar CHF, resistance down, broke through the trend support, come back, retest, down. It looks bullish at the moment, but this is going down. This is effectively falling to the downside, so that's going down. That definitely looks like it's going down. I was going to do the New Zealand Japanese yen as well as the Euro Japanese yen, but I never even got time to do it. When I got the Euro Japanese yen, it shot down. I've got the US dollar one. I thought, should I do the New Zealand as well? And when I looked again, it already gone. But anyway, it hit the support and it's bouncing up a bit. But this will do the same. They've all got the same picture here. There's some money lying, I think, somewhere around about this level here, which is probably going to take and then come down again. Okay, so that looks like a thing. It looks like it's going to go down there. Shane, yes I am. Well done, Shane. Lovely to hear. Glad to hear you're making a fortune. That's always good. Do you also prefer gold? I don't have any preference in the market. If there's orange peels to trade, I'll trade them as long as it's tradable. I trade anything. I don't have any preference. Yen weakens despite intervention. Okay, there's intervention warnings, but yen is still weakening. Can you believe it? Gold, we have a long trade on gold at the moment, a long-standing long trade. And my main reason for holding it and not getting out of it is it's sitting on the support. It keeps bouncing out of the support. It hasn't gone through the support. My stop loss is below the support. And it just keeps hanging around here. And I actually did call it long yesterday because it bounced through the trend resistance, came back, retested, went up, came back, retested again, and it's going back up. It looks like it's crawling down the outside of this trend resistance. So you're probably going to move that trend resistance up, but I'm not going to do that just yet because I'm actually quite comfortable that this is actually going to go up. But what I'm actually looking at now is it's developing a new nasty little area here, which is down here. See there? It's developed this kind of like a little resistance level within the 4-hour chart, and it's just struggling to get above that again. And then there's another one just a little bit higher, just up there, which is struggling to get out of. And then there's the higher one, which is up there, which it needs to get past as well. So this is becoming a little bit of a bugbear at the moment, waiting for that to get away. But I think it will eventually start to pull out. And of course, if the indexes do go positive, I think gold will just kind of sort of follow it as well, just go with it, to be fair. So yeah, gold, I mean, a lot of people have been calling it short, and you know, at these levels, you've got to look at the move that it's made. It was at 5,500, 5,600 just the other day. Now it's at 4,000. That's a big, big, big move. Now, gold can move a lot. I know, I get it. But to be fair, I think the gold value will pick up and it will start moving in the right direction pretty soon. So gold will probably go positive. You're all watching me drink my coffee, but it is coffee with Rob after all. US dollar index has come all the way back down again. So it found its way all the way back up into the 100. Oh, there she went, hanging around in the 100, bomb, 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 bouncing around, and then poof, back down into the 90s. So it's back down below the 100 again, and it's losing momentum. This looks like it's actually going to come down, but there could be a double bottom here as well. Let me just take this line. Look at that. That looks like it could be developing a double bottom as well. That could be quite interesting. So it's bouncing off of that, and it looks like it might be moving up on that level. It's also broken the structure here. So if I look at this, that structure has changed. It's broken through that structure. Looks like it wants to move up. So the US dollar index of Dixie looks like it wants to go up. So that looks like it could be going a little bit up for now. take it as it is, or what it is, see it for what it is. Looks like it's bouncing and it's going up. So, but yeah, at the moment it's come down quite hard. This looks a lot like the Japanese yen, doesn't it? You know, US dollar Japanese yen looks so similar to this if you look at it. This big formation down and this little bounce to the upside. This little bounce to the upside on the Dixie might be just causing this little move here, this little bounce here. Doesn't it look so much the same, eh? Amazing. So don't tell me the whole move is in the US dollar rather than the yen. That's kind of weird, isn't it? But anyway, there's a good possibility that that's the main cause and effect. But it shouldn't be, because I mean the euro Japanese yen did exactly the same thing. I mean it just came tumbling down. It was all about the yen at the end of the day rather than the US dollar. An interesting move there. As I say, gold long. Okay. And yes, the Bitcoin has lost all of its volatility. The crypto has lost all of its volatility. Isn't that quite interesting? See, the thing you have to understand about crypto, guys, is crypto is based on a seller and a buyer. There's no asset value. It's built on fresh air. In other words, there's nothing holding it up. A US dollar, for example, a US dollar, you gain it, you base its value on the amount of currency that's in flow in America, for example, or around the world, or whatever the case, based on the asset value of America, the assets and liabilities of America, based on maybe there's some gold reserves, maybe there's some buildings, maybe there's some business, but it's all based on asset value. A company, you buy into a company like Amazon, whatever the case, McDonald's, you base it all on their assets and liabilities, the value of the company, how much there's in there, you know, all the rest of it, their price to earnings ratio, etc. Bitcoin, what do you base Bitcoin on? Bitcoin, you base it on a buyer and a seller. A seller says, I think it's worth that much. A buyer says, I think it's worth that much. What's holding it up? Absolutely nothing. Fresh air. There's nothing holding this up. There is no asset value. There is no CEO. There is no one behind this giving it some kind of value. So in other words, Bitcoin is fresh air, and it's a coin that's been developed that people can use as a form of currency, but it doesn't even exist in the real world. But now you're sitting with a situation where this can go anywhere. And I mean, it did lose half its value in a very short period of time. That said, somebody mentioned the other day, so did silver. That's true. Silver also lost half its value in a very short period of time. But that's just people that own Bitcoin that just are feeling bad. Bitcoin lost half its value in a matter of no time. And if that had happened to the S&P or anything like that, there would have been a national disaster. Silver losing half its value is irrelevant. Okay, it just doesn't matter, right? But it matters when it happens to something like an index or a forex currency or something like that. But when it happens to Bitcoin, everyone ignores it, just like silver. Like, it doesn't matter, it's only Bitcoin. So now if you had Bitcoin and it was $127 or something, and then it went down to 58,000 and it lost 50% of its value, I think you would notice if you had $1 billion and then you had $500 million, that's quite a big difference. So I think you would be upset. Now that's quite a big loss, right? So down, and it's been sitting around here. I don't know if you've watched my show before, or if you've watched any of my videos before, if you know anything about my Bitcoin story, my feeling is that Bitcoin's going to go down to 40,000 based on the fact that there's a huge chart pattern. If you go back to the day, I'm just going to go to the weekly here, if it'll ever show up on my chart. There's a huge head and shoulders that's developed there. Maybe it'll show more on the day. There's a shoulder, there's a head, there's a shoulder. That shoulder has not been negated or broken. That shoulder projects down to 40,000. So this Bitcoin could break down to the downside here, off of this head and shoulders, down to the 40,000 level, if you look at it from a technical perspective. So there's your move up, there's your shoulder, there's your head, there's your shoulder, there's it coming down. The shoulder break negate is all the way up here at 100,000, 99,000. Long way to go before it negates that. So it's lost its value, and the head, if you project it down, projects down to 40,000. So Bitcoin, in all likelihood, will probably go down to 40,000. If I'm not mistaken, I could be mistaken. Who knows? Trading's 50-50. We don't know. I can't predict the future. You can't predict the future. Charts can't predict the future. They can only give you high probability trades, and that's what you're looking for. And if I look at the probability and I look at the pattern's telling me Bitcoin is a short trade. So I only look for short trades on Bitcoin at the moment. I'm not looking for any long trades on Bitcoin at the moment, as far as that goes. So yeah, that's just for interest's sake. You did ask, so there you have it. There's your answer. And then we've got, okay, let me just see here, the VIX. We've gone over the VIX. US dollars that we've gone over, and we've got the oil, which is now coming down. Oil coming down means everything's hunky-dory in the world, and the world's just happy, and everything's fine. So that's just how that's going to go. Let me just answer those questions. Hi, Rob. If the Dixie has broken the structure and maybe pushing back up, gold will start to fall again now for new lows. Thanks. As I've always said, when it comes to currency, when it comes to oil, gold, or currency against currency, US dollar against euro, US dollar against oil, let's use like US dollar against gold, whatever, okay? You have to understand this one concept. Sometimes the US dollar can be the cause and effect of oil or gold or another currency going up and down. It can be the cause and effect, right? Other times, you have to understand that oil has got its own personality. Gold has got its own personality. The euro has got its own personality sometimes. Sometimes that can be the cause and effect of something moving up and down. What's causing oil to move up and down at the moment is probably the strife in the Strait of Hormuz. Hormuz getting closed, getting opened, news going around that, surrounding that. So the dollar is not having the cause and effect on the oil price moving around. What's having the cause and effect is the fundamental news in the background. Gold could get moved by the dollar at the moment, but then there could be some underlying news that could cause gold to move in a certain direction the other way, or the euro or the Great British Pound. So understand that when you look at pairs, try not to just see the dollar or just see the oil, or just understand that both factors can play a game with you, play a game with your mind that can move things around, right? And they don't always just go the same way. Things change. The market changes on a regular basis. It doesn't stay the same. In other words, you see this happen, you see this happen, you see this happen, that you're working on probability, but probabilities change. So, for example, you see support and resistance, right? You see the support and resistance of something now. Let's go to S&P 500. So we see there's a resistance, there's a support. Every time it gets to resistance, it comes down. Every time it gets to support, it goes up, comes down, goes up, goes down, goes up. And then one day, it breaks out. Let's say it breaks out here and it goes. Change. The market changed. Something changed. Okay? Everything has got its own personality, its own life. So don't just base it on, oh no, the US dollar's going this way, so gold's going to go that way. It can affect it. It will affect it. It does have an effect because they are played off against each other, but they also have their own factors which can cause them to move around as well. So sometimes people say, oh, look, the US dollar's going that way, so gold must go that way. No, it must not. Not necessarily. It won't always do what you want it to do. Okay. Okay. Also, did you hear about the 80s manual intervention? Some are saying it's going to give a 600 pips move. The BOJ's manual intervention. Okay. The Bank of Japan's intervention. Oh, you're talking about the Japanese yen. Okay. Bank of Japan. Sorry, I didn't see BOG. I was like, what is that? BOJ, Bank of Japan, right? Yeah. That happens all the time. That's why I always trade the yen. That's what I was saying earlier. I always trade the yen because the yen is effectively, if you've traded the VIX, you'll know that, or if you've ever traded with the average true range, you'll know that that's like a magnet. So for example, on the US dollar Japanese yen, I treat the 150 level as a magnet. So if the Japanese yen is up at 160, I'm trading short. If the Japanese yen is down at 140, I'm trading long, because I'm of the firm belief, because of the Japanese government, because of their BOG's intervention and they always intervene. I've been doing this for 34 years. Oh, sorry guys, if you're new here, I'm Rob. But most of you know me anyway, most likely, and hopefully you'll see my name somewhere on the videos. But effectively, I know, because I've been doing this for so long, that the Bank of Japan intervenes. And in the recent years, 150 has become their level, so that's their favorite level now. They don't like it above 150. They don't like it, well, they don't mind if it's below. They're quite happy for it to get stronger, but it never gets much stronger than 120, 130. It sort of sits around there. And if it's down there, I'll normally buy it long because I know it'll go back up to 150 eventually. And if it's above 150, like I did here at 160, I'll go short because I know it's going to get back down to the 150 level, even below, probably into the 140s. And I'm expecting that this is the turnaround, that it will now go back down. It will now go back down below 150, and it will go down into the 140s for a while. It's going to hang around there for a little while. I'm going to take profit on my trade at that point, and then wait and maybe take long trades and start looking for it to go back up again, because that's what you do. You treat it like a business. You buy a sweetie to sell with a view to, I'm paying this price for it and I want to get that price for it, so that the disparity between the two is my little profit that I'm going to put in my little piggy bank. And that's as simple as it gets. Keep trading simple. Stop making it overcomplicated. Just make it easy. Just downscale it into, I just want to take a trade and make a profit. That's it. Okay. I know a legit guy that claims that Bitcoin is pure American debt. Well, I don't know how he figures it out as American debt. That's super interesting. Okay. I don't know how that legit guy figured out that Bitcoin is American debt. No, you won't have any proof on that, that's for sure. Understand one thing about debt. Here's the thing. If you go back in time, if you go back to the dawn of time, let's go on to the S&P 500. If you go back onto the dawn of time, into the early 50s and 60s, there was a time when people were married, and usually the male side of the marriage would go out, go to work. The man would go to work, and he would earn a salary, and with that salary he could afford a car, maybe 2 cars, a home, and 8 children, and he could survive pretty well. And that all, with inflation, sort of died, and it went into the 70s, where suddenly the only way that a couple could survive was if both parties went to work. So the man and the wife had to go to work, and they had to reduce the children from 8 to maybe 3, sometimes 4, and sometimes 2. But okay, so now you've got the man and the wife working, and you've got a couple of kids, right? Now you can afford a house, couple of cars, life is okay. Then it went into the 80s, the debt scenario. Because now, how do you make more money? How do you get more money into the family? Because now you're sitting with a scenario where inflation's caught up to you, both are working, you've got the 3 kids. So what do? You reduce to 2 children because that's more affordable than 3. Maybe you can't afford 2 cars anymore, so you drop to 1 car, smaller house. Maybe you reduce the size of the house. You know, that's where it's going. But then they learned that, hang on a minute, there's another way. You can live on debt. You can live on other people's money. There was even a movie in the 80s called Other People's Money. I think it was Danny DeVito that played in that movie. So now you learn that you can live on debt. You learn that you can live on a credit card. So what do? They dish out credit cards willy-nilly, left, right, and center. You can walk into the bank and say, could I have a credit card? Sure. How many do you want? Here, I have 3 or 4. And while you're about it, don't you want a gold one? Ooh, that's pretty. I'll have a gold one. Nah, we've got better than that. How about I'll give you a platinum one? The next bank. Gold's rubbish. Have a platinum one. That's even better. You know? And then that's it. People are in debt. Now people are in debt. And they're just getting into more and more and more debt. Now you got both people working. Everyone's in debt. And everyone's still living it up. 2 cars, house, 3 kids, 2 kids, whatever the case. Living their life. We get to the time we're at now, and the problem is, where do we go from here? What's next? Because everyone's in debt. No one else can go and earn more money. You can't get much smaller with the houses apart from maybe living in a caravan, and the debt's not getting paid back. Countries are drowning in debt. Money is being printed to cover that debt. The more money you put in circulation, the more the money devalues. It gets to a point where it becomes insane. So that's how, you know, debt, I doubt, has got anything to do with Bitcoin. It's just a cause and effect of how the world has gone in the capitalist system over the last 80 years or so, or maybe 100 years. It's just headed down this road, and it's coming to an end where, you know, people are like, what are we going to do next? How are we going to get around this? And yeah, there are a few possibilities, but it's not Bitcoin, and it's not, you know, having that kind of currency. That's not going to make much difference. They are going to go digital currency. I believe they will go digital currency, because digital currency will be like just the US dollar in digital. That'll be it. You know, they'll go digital currency, but it's got nothing to do with Bitcoin. It's still going to be based on an asset value of some country or some asset or some value, which has got some value. Bitcoin's got no value. It's fresh air. Okay, so that's my story on debt. I hope that makes sense to you, but yeah, I can't see how Bitcoin can have anything to do with pure American debt, to be fair. That's an interesting one, isn't it? I wonder if this S&P 500 is going to break out. That should be interesting. If it breaks out, goes to the upside, eh? That should be really interesting. You know, a lot of people are wondering why that happens. Why do NASDAQ and S&P 500 and that go up when there's a war going on in the world, when things are going wrong, when everything's ending, and, you know, like, it's because these indexes are held up by a small handful of companies, and that small handful of companies are massive. They're huge, like Google, Meta, you know, Nvidia, these guys. They're holding these indexes up with their strong earnings and their strong futures. But the problem that you've got with that is those companies are also held up by the general public, human beings in the street. So if those people can't support those companies or can't put advertising into place or whatever the case, then those companies are going to lose in the future. Now, every time you invest in something, in a company, you're investing with a view to the future. You're investing into making a profit in the future. So it's the probability of what's going to happen next. Forward earnings, right? So you're not looking at yesterday, but when you take the trade, you're looking at yesterday's earnings and today's earnings, and you say, nah, today's earnings were really good, so next earnings will also be really good. But they're not going to be really good. Maybe they're not going to be that great. Maybe they're going to be really rubbish. You don't know. And if you look at the way the world is at the moment, there is a possibility that those earnings could go bad. So now you sit with a scenario where you invest in something thinking it's going to go great, and then it goes really, really bad. You've got to be very careful of that situation. Don't get caught up in that mess. There you go. So NASDAQ definitely looks like it's going back long again. There is another level down the bottom here, which I'm just going to draw this up here like that. You can see it developed at the bottom here, and it kind of came down close to that level and sort of turned around and created a kind of double bottom here. The NASDAQ does look like it wants to go up. If you want to be sure of that, wait till it breaks through that trend resistance and breaks to the upside and heads on up to the upside, giving you that trade, giving you that loads and loads and loads and loads of money. Last time I saw it was up because of Microsoft's earnings. Yeah, Microsoft had good earnings, but it pushed the whole market. Yeah, it did push the whole market up. That's what it does. The NASDAQ has got a lot of volatility in it, and it does tend to move the market around, does tend to, you know, move things up and down quite a lot. So you can expect that. You can expect the NASDAQ will move around insanely when there's a lot of earnings going on and the like. Aussie dollar, New Zealand dollar looks like it's bouncing and going to the upside. Looks like it's going to bounce and go up. And this is what I say, cause and effect. Each like currency, each little item has got its own personality. So the Aussie dollar's got its own personality. New Zealand dollar's got its own personality. Now these two trade against the US dollar, but they also trade against each other. So they've got their own personalities, but they do like to stay in this range. So they're bouncing out of that support now. Probably go back to the top again. Probably bounce out of here and go back to the top again. That's why I say you keep it simple. Keep it really simple. Gets into resistance and get a red candle, you go short. Gets into support, you get a green candle, you go long. Generally, those are your odds. Your odds are it's going to happen a number of times. When it fails, it's going to break. Break down, take your stop loss out. You got to work out how many times it's going to take your stop loss out, and how many times you're going to make profit. But you just want to lose less on your losses and make more on your wins, and then you'll be okay. That's basically where you are with it. Don't know if you guys have got any questions on anything, or this is the Nikkei. Nikkei's moving down, and it's been doing this for quite a while. I don't know if you guys have noticed, but the Nikkei has been falling for quite a while now. The other indexes have been bouncing up, but the Nikkei has been losing steam. It's just been up, down, up, down, up, down, up, down, up, down, but it's gradually just been bearish and moving to the downside. And it's actually quite interesting that the Nikkei is doing that. But you've also got this at the bottom here, this little level. So just keep an eye on that. That could have an effect. And might say, well, that's enough for me today. I'll start going up again. And if all the indexes start going up, that'll probably break to the upside. If they don't, though, then this is going to come down, isn't it? It's going to come crashing down with all the others. Could be quite interesting. So the question is, do I trade my own account or a prop firm? I've always traded my own accounts, always my own CFD accounts, and I've got my investments on the side, cash accounts. But I have traded a few prop firm accounts recently as a result of I had to get in touch with them. I had to get a feel for them because I started to warm up to them. Those of you who know me will know that 2 years ago, I wanted nothing to do with a prop firm account or a funded account. I thought they were all a bunch of rubbish and scams and whatnot. And then I figured out that there was a place for them in the market because there's a lot of traders that don't have capital to trade. So they help and they're useful. They're also a useful tool between you learning to trade on your demo and putting your cash in the market. You can trade a funded account in the middle. Also for those, for example, if it's your last money on earth, or if it's a pension, or if it's your savings and you don't have any other income, it's probably not a good idea to put all of that money at risk. So it's a better idea to find a funded account, take that funded account, use that money and make money from that rather than use your own hard-earned cash and lose it all, because you can lose it all quite quickly. So there's a little bit of playing around with it. I warmed up to prop firm accounts and funded accounts, so much so that I even do have them in my blog page now. If you go down to the description and you go into the blog, I've got a page there, particularly mainly for beginners and people that need stuff and whatnot. It links you to all my social media accounts. It links you to everything you need. And there's a couple of funded accounts there as well that you can get involved in. But it's all on that blog page. It's not in my description. You just go to that blog page. It's free. You don't have to sign up or anything. It's just go there and it's all there for you. I just put that together for you so that it doesn't mess up the description, and so that if you need something, you can go and find it there. And if there is something that I find interesting, I'll put it there for you, and you can go and check it out and find it for yourself. It just makes it easier for everyone to find the stuff. It's all in one page. Okay, so yeah, if you need funded accounts or anything like that, that's also there. But whether you're trading with a funded account or whether you're trading with real money or whatever you're doing with trading, it doesn't really matter. Just do your thing, and it's the same at the end of the day. The difference is you can't lose all your money if you're trading with a funded account. Imagine a user wondering how much that Japanese yen intervention cost. You see, when you put a cost to it, you see, all they had to do is remove money from the system. The US could have bought as well. They could have bought yen, right? So if the American brokerages and money and all the rest of it decide that they want to buy loads of yen, then they can do that as well, right? That could also have a cause and effect. But one of the main causes and effect for a government is to remove money from their system. So the way that the world system works with money is they put money into the market, and they take money out of the market. So they shrink the amount in circulation. So the amount of money in circulation relates back to the asset value that's available in the country, and it relates to the value of the money that's in circulation. So they don't have to buy. They can literally remove money from circulation, and that will have an effect, okay? But then, like someone in the US could be buying loads and loads of yen, for example, or selling, or that type of thing. That will also have cause and effect. And then obviously the US dollar itself could also have a cause and effect against the yen. But generally, what actually happens is the way the money flows into the market and the way the money flows out of the market is what causes the value of the monetary value to go up and down within the country at any one time, the money flow. In other words, you don't even need tax systems. You don't need tax to tax people. That's unnecessary because you've got money flow in the market. The country runs like a business. It exports, it imports, and people import things. And this is, Trump calls it tariffs. I mean, it's tax on goods that are coming into your country, things like that. So there's all this exchange and bartering going on between countries. That's where all the money comes from at the end of the day. The amount of money in circulation affects inflation. There's no real need to give your population more money than they need and then take some away as a tax. It kind of defeats the object. But there are things that are taxable on the ground, which is why they try and tax it. Like farms grow things and they have to be taxed. Things that are made from scratch have to be taxed. But that can be taxed as value-added tax, or sales tax, or whatever the case. It can be taken from there. I'm getting a little bit over myself here and overcomplicated, so let me not go there. But yeah, how much it cost. It's kind of, no one really took a checkbook out and wrote a check for the Japanese yen. That's not how it works. It's just a question of moving money around and putting less in circulation, taking it out, maybe a lot of brokerages selling or buying, and that sort of thing. That's kind of where it goes. But for the government, it's just moving things around. That's all. They can just change the interest rate and affect that as well. It's kind of like that's how it is. It's not like they have to write a check. Okay. Johnny is here watching with the beginning of the video. Johnny, good to see you. Lovely to have you on board again. You guys can always rewatch these videos every time after the live show. What I do try and do is I try and take the link and put it in the posts. I hope you guys know about posts on YouTube. There's posts, okay? You can literally post stuff there. So what I try and do is I try and post the stuff there so you guys can find it. I also try and post it on the Telegram channel for you guys, which I did do today. It's there. If you're not a member of the Telegram channel yet, make sure you go down to the description and click on the link that says Telegram channel and go to the Telegram channel and be part of the group and the community. It's free. You can join it. Just, I don't have a Discord account anymore whatsoever. So if anyone says join the Discord account, it doesn't exist anymore. At least I hope it doesn't. There was a whole bunch of people that were trying to imitate me and trying to scam you. So do be careful of that, right? So they've copied my name and copied my stuff and everything on Discord. Discord is so bad. And they tried like selling stuff to you and ripping you guys off and whatnot. So I'm not on Discord at all anymore, at all, as far as I know. I'm trying to check what's going on there, but I'm really don't get involved in Discord. So just join on Telegram channel. I'm only on the Telegram, all right? Telegram or WhatsApp, but Telegram for you guys, it's fine. Okay, that's good. So watch out for that. Be careful of that. But yeah, join that because you can chat to each other. Okay, Johnny. I see a lot of people are too shy to ask and engage with you in here. That's fine. It's a very small group. We're a small group, and I don't mind if people engage or don't engage or just want to watch. That's all fine. I've got no issue with that. Euro Great British Pound, it doesn't seem to take a direction. Euro Great British Pound at the moment is kind of in a lull, just like crypto. I fear that they do intervene. Trump would wage a war on them. I think Trump is kind of helping them out at the moment. I think they're buying Japanese yen or something. It's kind of like a big thing at the moment. Euro Great British Pound doesn't seem to take direction. I'll have a look at that quickly. Boom, 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 boom. Euro, Great British Pound, Euro, Great British Pound has got no direction, but it does actually, in the sense that, let me take these lines out here because they're actually stupid, eh? Let's get these lines out of the way here. And then if you look at this, it's come down, big waterfall formation. That was because of this prime minister resigning or whatever caused this to come all the way down, right? It's come all the way down. It's broken to the downside quite viciously. And then it's found its way back up. And then it went to retest, but then it went through the retest and broke back up the level. Now that's come back and checked, and it's come back and checked again. Seems to be bouncing to the upside. So at the moment on Euro Great British Pound, I'm kind of a little bit bullish in the sense that I think it might just go up. It looks like it wants to go up. So there's a good chance that that is actually going to start moving to the upside and start going in that direction. Is the VIX close to an entry? I don't think it's close yet. It's not close enough. Let's put it that way. Because I think it's on 16 or something like that. 17. So I only enter, my rule is I only enter if it's 15 and below. And it hasn't reached that yet, so I haven't got in. I've been leaving it alone. And at the moment, I'm kind of in two minds because I'm thinking, I mean, things are getting resolved in Iran. Things not really going badly there or whatever the case. So what's going to cause the volatility next? I really don't know. There will be something. There always is. But as I see it at the moment, I'm like, oh, do I want to buy it? I'll wait till it gets below 15 and then I'll get into it and take it from there. So the one person who asked a lot of people to try to ask engage with you all in here. It is a small channel, and for some reason or another, this channel doesn't get as many excited traders as many of the other channels do. I see a lot of the other trading channels, they get like hundreds of thousands of views and all these extra things and whatnot. And some other odd reason, maybe I'm boring. I don't. I'm one of those boring traders that just make money. I don't really get all involved in the other stuff. So yeah, it doesn't look like it's going to ever get much bigger. Maybe one day. I heard the US is also bailing out the yen. So yeah, that's what I was saying now. Maybe they're also getting involved. All about the carry on trade, which gives me a headache anytime I hear about it. It gives everybody a headache when they hear about the carry trade, but don't worry about it. Just deal with it. It is like a double intervention. It looks like they've jumped in, but it's all about profit at the end of the day. Think about it. They're just trying to make a profit because they know that the Japanese themselves are going to push it down. And if they push it down even further, they can push it right down and then everybody can buy it again and make a huge profit. So that's kind of where it's going at the end of the day. It's a bit like me. I was sitting in the US dollar, Japanese yen, for example, back on the yen again. Sorry, guys, we're talking so much about this today. But yeah, it is an interesting topic when you think about it. I sat in it for a long time. And when it got to this level, I started to think to myself, and you know, we've all thought this in our minds. They're trying to get me to get out of my trade. They're trying to get me to give up. They're trying to get me to say, that's enough of that. They've beaten me and I'm out of this trade. And I think they did get a lot of people. That's what pushed it all the way up here. I think all the short sellers got taken out up to this point. And that's what they do. They just keep taking, because some of it went up quite fast. So a lot of those stop losses were taken out. A lot of those people that were in this trade were taken out. And I just kept holding and holding and holding. And then that happened. And that's when they decided enough have been taken out. Enough of the money has been cleared. Now it's time for us to make a profit. And I'm sure that's not what they've done here, is they've made a huge profit moving it down here. And they're still going to move a lot further. I think they're still going to push more. I think what they're trying to do here is just see if everybody gets excited, puts a little bit more back in, or lets their stop losses get out, or just gets out of the trade. And then they'll push for more money to the downside. So someone besides myself is making a huge profit on this particular move, based on all of them, to be fair. Random, how's it? Thanks, Random. Hi, Rob. DAX seems to be in an upward channel with the opportunity to take long short between support and resistance at the moment. What do you think? I'll have a look. Can we have a look at British Pound, US dollar, and gold? Yes, I'll have a look. Random. The TikTok generation can't concentrate on anything for more than 5 minutes, so they follow the 1 minute traders. which whoop and holler and have flashy lights. I agree with you, imaginary user. Quite frankly, that's what they do. That's why people get hooked on 1 minute charts, 5 minute charts, and tick charts. Is it's instant gratification scenario. Everyone wants an instant gratification, and so they end up on these the shorts and the I tried making shorts on the channel for people, and I realized it's a bad idea because that generation starts watching them, and then they mess around with the rest of the stuff and the videos and whatnot, because they subscribe and then they unsubscribe because it's not what they're looking for, and they mess around. So you end up with people that shouldn't be there. That's actually quite true. So I think they like the flashy lights and they like the fast stuff. Very, very, very true. Okay, so first we'll have a look at the DAX, because Mutiny Bounty wanted to look at the DAX. The DAX. All right, so what we've got here, let's just make it a bit smaller, just for interest's sake. Let's take it up and just see what were you saying here. Apple channel with the opportunity to take a long short between the support and resistance at the moment. What do you think? I think it's let's just take it a little even higher and just see. I just want to look back. Just want to look a little bit left here, but no, this is hitting an all-time high. So let's be careful on this one, shall we? Let's just have a look here. This is very similar to the S&P. It's breaking high to highs. It's going up. So what you want to do here, okay, you see on the day chart, it's broken out of this range. It's moving to the upside. So it's like a prisoner broken through the wall and it's running away. Okay, it's going. It might come back because it's forgotten something and look for the stuff down here and then go back up. I would probably wait for the retest, or you can take the trend, draw it in. Let's just see where we can put it on that side. Not much of a trend on that side, but you can put it in anyway on the trend channel. Just have a look and see what it's going to do, because it might just come down, break through that and go down, or it might just keep going up. At the moment it's bullish. It's just a buy, because, you know, apart from all of this, apart from this breakout, I mean, it's broken past the prior high. Look at that. It's just broken straight up. So it's a really, really, really strong trade at the moment. What's holding me up with this at the moment is not that it's overbought or anything to that effect. It is that the indexes tend to follow each other. And I'm just looking at, I want to see the S&P 500 and the NASDAQ push on. And if they push on, then the Germany 40 is going to push on. If there's a bit of a correction, this might come back, retest, and then go up. So you might want to wait for that. I'm not going to leave those lines in there, but what I am going to show you is, if you look at this nicely over here, you've actually got some money lying right here. There's a good chance that this will come back, take that money, and go up before it continues on. So I'm thinking just a little bit of a correction, and then a long trade to the upside. You're probably going to get a similar move on the other indexes as well. A slight sort of, something's going to cause it just to lose a little bit of momentum, come back a little bit. You can grab it and then it will go. So I think that's where it's going to go at the end of the day, something like that. Okay. And then you were asking about Great British Pound, US dollar, and gold. Great British Pound, US dollar, I think I said it was long, eh? And here's the thing with the Great British Pound, US dollar. Go and have a look at the Euro US dollar when you're looking at the Great British Pound US dollar. See what you see, okay? So I'm looking at the Euro US dollar. I'm seeing it's come back. It's bounced up, bouncing to the upside. There is a channel that it's in. It's coming down a little bit. It's not going to come down too far. So Euro US dollar looks like it's going to sort of end round about here, come back down, go back up again. Might bounce again. Otherwise, it's going to go straight back up. I'm just going to look here at the Great British Pound US dollar and say, all right, what have we got here? Okay, because that's what you want to look at. Great British Pound US dollar for me. If I take a long trade on this, my risk to reward is poor. Because my risk has to be down here and my reward is here. So it's very narrow. So I don't want to really take that risk to reward. So I'd prefer to look for a short trade on it It's in the middle of nowhere in the moment. It's in the middle, Cyril. It is bullish as it stands, but not bullish enough for me to say I'll get into that. So I think what I'll do is I'll wait for a short trade, okay? And then you can take the short-term trend if you want to and just see if it breaks through that as well, if you want to. Or you can wait for it to get back up into this resistance here and take it from that level there. Or you can also wait and just see if it's going to break that, get to that trend resistance and come down from there as well. Break down from that level and start heading down. But what I'm going to look for on the Great British Pound US dollar is the short trade for the time being. I know we could get a long trade all the way back up here. I mean, it could go back up to that level, but at the moment it's been trading in this range. So if you look at this range, take it to the day chart. If you look at this range, it's been in this range for quite a while. Okay, there are lower levels, there are higher levels, but every time it sits in this range, every time at the bottom here it likes to go up, and every time at the top here it likes to go down. So these levels are quite important. So my risk to reward to the upside, very poor. My risk to reward to the downside, pretty good. I got more reward coming to the downside. So what I would look for, like I say on this one particularly, is a short trade. Short trade will look good on the Great British Pound US dollar. And then you were also asking me about gold, and gold I'm long. Gold I am long. I've been long for quite a while and I'm remaining long for quite a while. And I've got my reasons for that, because for me, gold is bearish. It's been coming down, coming down, coming down. You can clearly see the big picture. It's came down, come down, come down, come down, come down, all the way down to here. But I drew this trend in and it broke through that trend resistance and it broke out, came back, retested, broke out, and it's trying to go up. I put this level in here on the 4 hour just to show you that there is a level here that could give us a headache. There's another level here and there's another level here that could give us a headache. But what we're looking at is the bigger picture. And the bigger picture is that it might jump up. You see, it's on the support. Hit there, hit there, hit there. So this level's holding it up. My stop loss is down there. I'm looking at the possibility that it recovers and starts heading back up to the upside. You got to look at gold for the fundamental picture that it's in. It was at 5,500, quite close to the top. People were calling for 7,000 at one stage. It's come all the way back down to 4,000. It's a big fall. It's a rather large correction. That correction appears to be settling. It seems to be finding the bottom. That said, you can never call the bottom. You can never call the top. But it seems to be finding a base, okay? And if 4,000 is its base, it is either going to break down and break through it, which would be an all-time disaster, or it's going to bounce up from there and start heading back up to the 5,000 again. So for me, I'm long on gold as we stand at the moment. If you make it look a little bit bigger, you can clearly see that you've got this move up here, come back down, move back up, come back down, move back up. So gold at the moment for me does look kind of like it's going to turn bullish. It's settled here and it wants to go up. All right, so that's me for gold. And then let me just see. Okay, US dollar Japanese yen is doing the old suck you in thing, random. So what it's done, it's come down, it's made the money, and what it's doing now, it's bouncing. Okay, so it does do that. You see, when you have a waterfall formation or a big correction or a big crash, right, it always bounces like a ball, boing, bounces back up. So it's bouncing up a little bit, but it's not bouncing straight up. You notice it's sort of falling over to the side. Take note of what these things look like. Take note of the size of the candles coming down, the red candles, okay? Huge red candles. Take note of the size of the green candles going up. Tiny little green candles. Not much confidence in those candles, is there? So that's like a little bounce. It's a tiny little bounce. In other words, the ball's a bit out of air. It doesn't have enough air to push it all the way up. So it's like bouncing, it's going, it doesn't want to really get up, does it? So that tells me that the momentum is still to the downside on this Japanese yen, while upside in the yen itself, US dollar Japanese yen, okay? So that there's still a lot of short here. So for me, this is going to bounce up. Worst case scenario, it's going to come and try and take this money up here. There's a bit of money just lying above it here at this level here, okay? Orders waiting. It might come up, just take that money and then start coming down again, or it's just going to roll over, continue on down, break through this level and break down to the 150 level that they're pushing for. Fundamentally, they're pushing for that 150 level. That 150 level is a magnet. That magnet is drawing it in. It's sucking it in. It's trying to get there as soon as it possibly can. What this is, right? You see, they were waiting for my money. They were waiting for me to get out of the trade, right? People like me, lots of people like me, getting our stop losses hit, getting taken out, and then getting taken out of the trade so that they can make a huge profit all the way down. Now it's hit this level. Now they're trying to convince you to get out of your trade. They kind of convince you that the trade's over, it's done. Sell your trade, walk away, take your profit and walk away. Off you go, little guy, go away. And then once we're gone, oof, she goes back down again and the money gets sent down. So yeah, don't get caught by that. It could go all the way back again and I'll just get a headache. But as it stands at the moment, I think we've still got a lot going on that'll push this and make us our money. All right. How many years I've been trading? 34 years. Everyone makes to their thousands by holding for 28 seconds. Okay. Everyone wants to make thousands by holding for 28 seconds. I think it was last week you mentioned the 28-second trader. I haven't seen their videos. I don't know who they are or anything like that, but you mentioned it to me the other day. Some guy who says he can win money every 28 seconds. Be good. Yeah. Okay. I doubt. Right. I'm already short the Great British Pound US dollar. Okay, that's fine. If you're already short, I believe the short's going to be the way to go at the end of the day. I just wouldn't have taken the trade yet. I'd be, waiting for a better entry, but okay, it's good. No problem. Just hang on to it. I think it's going to go short. So Lunchalots, hey, go long on the Aussie dollar, New Zealand dollar, or wait for retest. Aussie dollar, New Zealand dollar, I think we're waiting. Let me just go back there. Aussie dollar, New Zealand dollar. Oh no, we're not waiting. What's wrong with me? Aussie dollar, New Zealand dollar is ready for the long, but what you might want to wait for is for it to come out of this level and give the green candle to the upside. But other than that, yeah, not bad. It looks okay. It looks like it's ready to go. You see there, it's broken the trend resistance. It's gone up. You don't have to wait for it to retest that. I would just maybe wait for it to break out of this support level and go up, but you don't have to. And trading's 50-50. There's the top, there's the bottom. You're at the bottom, take the long, go up if you want to. If you want to trade the Aussie dollar, New Zealand dollar, doesn't look like a bad trade. Let's just go back a bit. Look at that. Pretty much it's been here for quite a while. Every time it gets here, it likes to go up. Time it likes to come down. There is this move here that could be of concern. So worst case scenario, I'd wait for it to break out of here. Best case scenario is take it now and just have a stop loss in place just below the prior lows here, just to cover yourself. I mean, sorry, you're going long, yeah, just below the prior lows there. Okay, that should be just fine. So long trade, Aussie dollar, New Zealand dollar looks fine to me. It looks good. Okay, there we go. Gold stock can't go below 4,000. You see, it's building a level there. It's building a level at 4,000. It seems to feel that 4,000's it. I'm actually sitting long on the trade because I think it's trying to build a base, and it's going to build the base at 4,000, and it's come down quite far. I mean, it's at quite a correction from 5,600 or whatever it was. So I'm looking at getting a decent profit out of that on the long side. Otherwise, stop loss is there just below that level. I put the stop loss, I think, at 3,800 or something like that. And as far as I'm concerned, if it gets down there, then we're in trouble. It's probably going to go quite far down in the 3,000s, but it really shouldn't get down there. And I think 4,000, you see, human beings like round numbers. Think about this with trading. When you're looking at stop losses, when you're looking at numbers, when you're looking at things on the side here, this index here, round numbers. Round numbers are important. People don't think in decimals. People don't think in decimal points. People always think in round numbers. Round numbers are the thing. So rather than 3,997, everyone's thinking 4,000. 4,000, it's a level, that's it. If it sort of shoots down to 3,997, don't panic. I mean, that's just like it moving a little bit down to that level, that's all. it'll just bounce out of there. It's still like around, it'll be 4,000. Okay. And that's the level it's basing it on now. So if it breaks through 4,000, I mean, then you're looking at 3,500 and 3,000. Those are levels that you don't really want to get to. But I think 4,000, it's building a level around that on gold. And yeah, I don't think it is. I don't think it wants to go below 4,000. I think it wants to bounce off the 4,000. And that's because there's a lot of traders like myself that want to buy it and hold it and go long. And so there's a lot of institutional money buying it at that level. So I'm just following what they're doing because they're the clever ones. They're the ones with all the money and they're the ones that are buying it there. But yeah, I'm also long on gold and platinum. Platinum's interesting. I don't trade platinum anymore. I used to trade it and or try and trade it, but there's not a lot of liquidity. So when you trade large sums of money into platinum, it became difficult to sell, buy and sell and whatnot, because when something doesn't have liquidity and you want to sell it and you've bought lots of it, then you end up like you want to sell it at say 1,000 and then it sells and it goes 1,000, 900, 800, and those orders get taken because you're just selling and you end up selling for much less than you actually wanted to. So I prefer something with lots of liquidity. So if I want to sell a lot of stock at that price, it takes it all at that price if possible. So I'm not a big fan of trading platinum. But I would trade it. It's not a problem. I'll trade orange peels. Random's trading a demo account. That's fine. Learn there. That's good. When you've got some money, Random, get yourself a funded account and start trading with some, or trade with some real money. You've done it before. I know you have because you've been on the live shows and you've mentioned it and you've lost maybe 1 or 2 live accounts. But do it again because that's what keeps your mindset right. Because you see, if you're trading on the demo, then the demo is going to be, how can I put it? It's just trading the lines. You're not really taking any risk. So your psychology is not with it. But you'll learn how to trade at least, and then you'll get a feel for what you're doing. And then before you put like real hard-earned cash in, if you can put in like a funded account, and then you are trading with something real, and that will have your psychology moving along the direction that you need it to go in. For those of you who haven't joined the Telegram account, make sure that you do, so that everyone can chat to everyone as well. But just whatever you do, just understand that there isn't a Discord account. Okay, that's someone trying to scam me. Okay, yeah, just get your confidence back. I agree with you, Random. Just get your confidence back. Just like make sure you feel like you know what you're doing. Run with it. Perfect. Absolutely, it's the best way to do it. You must have a lot of knowledge and experience, man. A lot of experience. Probably enough knowledge. I'm not a genius. I'm not a clever person or anything like that. I've just been around for a long time. The thing is, what you'll find, you say here, you must have a lot of knowledge and experience. You don't need to be clever to be a trader. You just need to be able to do it. That's all. Been around for a long time, been doing it for a long time, and I've seen a lot of things. And what you'll find is that every single trader that you come across, everyone has made the same old mistakes every single time. If you say, I did this, the trader, if they're honest, will say, yeah, I did that too. I did that. 9 times out of 10, everybody's done the same thing. Everybody's made the same mistakes. There isn't one trader that I know that hasn't tried to move their stop loss away or dollar cost average or get some FOMO or be impatient or try and move the time frames down to the 5-minute time frames and trade there. Every single trader's tried it. Every single trader's done it if they've been trading for a small period of time. I'm not talking about someone who joined today. I mean, we're talking about people that have traded for a while. I mean, there's a lot of traders out there that have been trading for 8 years, 10 years that are not successful yet, that can't make money, that are struggling. It took me many years to get the aha moment, to figure out that you need to make more on your wins, lose less on your losses. And that's not all about these charts. That these charts are not what make you the money. Win rates don't make you money. When you get into trading, You think, and every single trader has thought the same way. Just like I said to you now, we've all made the same mistakes. Every single trader thinks, if I can just win more trades than I lose, then I'll win. Tell me that's not what you thought, then I'll be like, you're a genius, because every single person I know has thought the same way. I'll get into trading, and if I can just win more trades than I lose, I'll win. And you don't realize for a long time, that that's not the case. You don't get it for a long time that that's not the case. It's not about how many trades you win. It's about how you make a profit. But it takes a long time to get to that, to figure that out. In the beginning, it's all about, I just need to win more trades. But more trades can't make you money. Winning more, having a win rate cannot make you profitable at all. It can just, no, yeah, you won more trades, yeah. But then you haven't applied anything else to it, so then you're just going to lose because you're going to put all the money on the wrong trades, aren't you? How's that going to help you? If you win 8 trades in a row and you win $80, $10 a trade, well done. The 9th trade, you decide you're so good at this, you're going to risk $1,000. Oops. 9th trade, you lose. You lose $1,000, but you won $80, so you've got a win rate of 8 out of 9. But you've just lost $920. Does that make sense? Win rates don't make you money. Ever. They never will. They can't. Okay. To start again with FTMO. I do have a link to FTMO in my blog, by the way. 50k account is nice. 50k account, risk $500 per trade. Okay. Risk $500 per trade on a funded account like that, and try and keep it down to 3 or 4 trades. Try and make some wins. You'll get up there. You'll probably do okay. Just stay with it. Everybody has also. Everybody gets that moment in their life when they think, I just can't do this. I'm just going to quit. I can't make any money, and you'll get there. It just takes time. It takes a long time, guys. You don't do this in a week. Hey, Rob, new trader here, and really enjoying and learning from your videos. Gone long on the NAS 100 today. Fingers crossed. Fingers crossed. Fingers crossed. Let's hope it all goes well for you. Just manage your risk, like I say. Just remember that trading is 50-50. And this is the important thing that I tell every trader, including every new trader and everybody that gets into trading. Understand this one concept, and that is you're going to lose trades. You're going to lose half, if not more than half your trades. And then you're going to think, but how am I going to make money if I lose half or more than half my trades? Well, it's very easy and very simple. Keep the risk the same and make more on the wins. Always try to make more on the winning trades than you're losing on the losing trades, but keep the loss amount managed. Keep it the same on every trade. So if you're losing the same amount on every trade, then you know what your loss is. And if you're making more on the winning side of the trades, then eventually you make a profit. Don't try and make all your money in one trade. It's kind of like it's over a period of time. I look at my accounts over an annual basis, and on an annual basis, I look to make a profit on what I've invested. That's how I look at things. I don't look at like this trade, that trade. I have bad weeks sometimes, really bad weeks. I have weeks where I look at it and think, oh, I can't do this anymore. This is insanity. Why am I doing this? And then I have other weeks where it's just so good. For example, last week I started out and I was thinking, this is not looking like a good week. There was a couple of trades that just went against me, and I just looked at it and I thought, it's just not looking like a good week at all. And then just like that, turned around, everything went positive, made a fortune. That's how your life goes in trading. You've got to live with it. You've got to work with it. As long as your risk is managed, you're going to take losses. Let yourself understand that you're going to pay for trading. Okay. Jamie, good to see you, Jamie. Glad to have you on board. Have you also traded futures and options in your trading journey? Yes, I have. And I don't need to. I used to have futures accounts open and CFD accounts open. Okay. And then, of course, investments, right? Now, I've separated the investments completely because I don't like to trade shares anymore because it affects my psychology. with my investments. So if I've invested in Amazon and I start trading Amazon here, then I'm going to want to sell my investment. So I don't trade shares because of that. So my shares are set and forget. That lives there, out of the way. Futures and CFDs, it's just easier to trade CFDs, and I'm allowed to trade CFDs in South Africa. So I trade contracts for difference. Don't need to trade the futures. But futures and CFDs, same thing really. It's exactly the same thing. I mean, CFDs are built on futures, okay? It's just that you're predicting and what have you. So I've done all that call and put and all that sort of stuff, did all that. I used to have a friend who could take futures and design a trade around 3 or 4 products and come out with a profit no matter what. I don't know how he did it. It was insane. The mathematics behind it was insane. Crazy guy. And he used to do it so well. No, but that was brilliant. Yeah, 3 to 4 trades, yeah, and okay, so 500 per trade, also great. Yeah, risk 1%. You'll be comfortable there, and then 3 or 4 trades. Try and make a few $100 and see how it goes. Yeah. You're right, Rob. It takes longer to become profitable than you think when you're just starting out. It does. It takes a long time. And the constantly profitable one is the difficult one. The reason people don't become constantly profitable is because they get ahead of themselves. They start to become overconfident. They make a lot of mistakes, and of course, dropping the time frames, trying to, you think you're profitable, and then you go for it, and then you make all the same mistakes again. Consistency is an issue, but consistency comes from, like I said earlier, just keep the risk managed, and then you'll be okay. Keep managing that risk. Don't deviate. Don't deviate from that part of the plan. If you stick to that part of the plan, nothing else matters. I mean, if you want to change the way you trade with candles and change your systems and your support and resistance and trade with Fibonacci or whatever you want to do there, that doesn't matter. These charts don't matter. What matters is that you just keep the risk the same, and you manage the risk, and you make more on the wins. That's all that matters. That 3-step business plan. If you follow that, then that's fine. Nothing else matters. You can mess around with everything else. That doesn't matter. The consistency comes from making sure you lose less on your losses and make more on your wins. That's where your consistency comes from. That's how being consistent will make you profitable. Hey, Imagine Users is fleeing. Cheers, mate. See you. Keep well. See you next time. Keep well. And we're back on Thursday again. We'll be doing this all over again. Yeah, thank you for being here. I hope you enjoyed being on the show as well, dude. Take care, stay blessed. Join the Telegram, of course. Do join the Telegram. Thank you, that was great. I'm not leaving yet. I'll be leaving in a few minutes though, but I'm not leaving just yet. I'm still here for a couple of moments, not much longer, but a few moments. S&P 500 is pushing up. This was the interesting one that I actually looked at earlier on, when I said I'm waiting for it to break to the upside here, and it looks like all the indexes are looking to break to the upside here. I was just being a little bit cautious in the sense that I don't know whether everything is resolved in the world and everything is going to go peaceful. But if you look at the S&P pushing up, you're going to find that the oil is pushing down, which means something is in the offing. They know something. So maybe there's a deal on the table. Maybe something good is happening. Maybe they're ending the war in Iran. Maybe it's all over. I personally, I don't know. I actually don't know. But it does. I haven't looked at the news because I've been talking to you guys for the last 2 hours, or hour and 45 minutes. But anyway, if I was looking at the news, something has happened here now in the last few moments or 2 hours, which has caused this. There's also opening and market opening and that sort of thing. But I think there's a lot of excitement going on around at the moment. There's your NASDAQ that I said go long on this morning. I told everyone we're going long on the NASDAQ this morning. I did preempt it because I said it's bouncing out the support. You can just go long, but it just, you might want to make sure that it breaks through that little resistance there before you actually worry about that. But yeah, if it goes through that resistance there, definitely a long trade to the upside. Everything's looking long at the moment, but it is a bit volatile, guys. There is a lot of things going on. And these news articles and fundamentals could change things quite quickly. So keep your eyes open. Thanks, Blue Mango. Cheers. Lovely to see you. Thanks, Tywald, and everyone else. Yeah, okay. So I think we can actually possibly end the live show now. I think everybody needs to run. Everybody's on their way. Everybody's on the go. Do make sure that you're part of the Telegram channel. Make sure you're not involved in any Discord channels, because I'm not there anymore. I was there for a very short time. In the very beginning, I had one, but there were so many scammers and people on there trying to copy me and whatnot that I stopped it and moved it over to the Telegram. Because really, what's it about? A Telegram channel's there just so that we can chat to each other, so that you can chat to me, I can chat to you, you can chat to each other. That's what it's about. It's like a WhatsApp. It's a communication thing. And also, when I have something on the go, I put it out there and what have you. I'm not trying to sell you anything there, except maybe the members area. But yeah, you know, all it is it's there for you to talk to each other and to chat about trading and that sort of thing. So Discord can stay off my list. I'm not interested in that. And if you are on that, get yourself off of there as soon as you possibly can, because you're just going to get scammed by someone, it looks like. That's really terrible. It's one of the worst things I've ever encountered, to be fair. It was a full-time job just batting off the scammers. So no, I don't want to deal with Discord at all. So yeah, we're on the Telegram channel and that's it. So join the Telegram channel. That's always fantastic and it's free. And it's a pleasure. I hope you have enjoyed the info. I hope the info has helped you a lot. I hope you'll join us again on Thursday for another fine, fantastic live show. I'll see what videos I can bring out for you through the week. I'm trying not to bring out shorts anymore because it's kind of confusing the kind of audience, you know, that like we talked about earlier. It seems like the audience that watches the shorts are much younger and they're not into this long-term slow patience thing. So it does affect them. So I'm trying not to put shorts out, but maybe what I'll do is I'll make quicker videos for you guys to watch as well, sometimes in between and what have you, but just on normal format and see how that goes, because then you'll know it's for you. All right. Thanks, Shane. Thanks, David. Lovely to see you guys again. I haven't seen you guys for quite a while, so it's lovely to have you on board again and see you back on the live show. It's always fun. Hope you guys will be here on Thursday as well. And it's been great. Till the next one, keep well, and cheers, ciao, and bye.